Hello, welcome to the ESS BIZTOOLS Financial Forecasting Product Package. The key subject today being implementing services that will make a difference. I'm Peter Towers, founder and managing director of ESS BIZTOOLS. If you have any questions during the webinar, can you please type them into chat and I will answer them later during the webinar. For those of you who are watching the recording of this webinar on live stream or at a time more suitable to you, if you have any questions, please send me an email, peter@essbiztools.com.au. It's time. It certainly is. It's time to diversify your services. If you're an accountant, a bookkeeper, or a business advisor servicing the SME market, let's go through why it's time. It's time to step into your power as a trusted advisor. I'm not saying you're not a trusted advisor in preparing income tax returns and giving advice, but there's more services that the SME market urgently require. It's time to help your clients thrive. It's time for financial forecasting and virtual chief financial officer support for your SME clients. I find it very surprising that we have a federal election occurring at present, and I haven't heard much said about small business. There are 2 million small businesses in Australia, according to the Australian government. And for the last 3 years, the Small Business Ombudsman, a position funded by the federal government but independent of the government, has been outlining various problems with small businesses. The reduction in the number of small businesses, the small business failure rates. The MYOB CEO, Paul Robson, published an article in the Financial Review 14 months ago, which highlighted many problems with people starting businesses that MYOB had identified from their survey. There's a lot of problems out there. And the only group that can help SMEs, in my opinion, are our profession, accountants, bookkeepers, business advisors. Please think about it as we go through this presentation today, because I now ask, why now? Why has this become so urgent? Think about this quote, which I heard 2.5 weeks ago. Clients' work as we know it today will disappear before the end of the decade, or perhaps even earlier. It's worth repeating. Clients' work as we know it today will disappear before the end of this decade, or perhaps even earlier. That was a comment made by Mark Wickerham, a fellow of the Chartered Accountants, Australian Chartered Accountant, principal of Value Pricing Academy, which I understand operates from London, a senior consultant for ChatGPT. And he made those comments in the AI automation in accounting webinars that were very well presented about 3 weeks ago, because he's now promoting AI very heavily for accountancy firms all over the world. Mark Wickersham indicated that he was a sole practitioner in Sydney up until 1999. And he was very frustrated. He had some big problems. He was working extremely long hours, earning less money than what he was paying one of his employed accountants. And someone suggested to him that he go to a seminar, which is where he heard Paul Dunn, a well-known marketing consultant for the accounting industry, speaking. And from that presentation and subsequent discussions with Paul Dunn, Mark became heavily involved in the concept of value pricing. He changed it within his accounting firm and had no reaction from his clients other than to say, we're a lot happier with you giving us an upfront quotation. We now know what our services are going to cost. We're not getting charged on the hourly basis. Clients don't like it. So he became a keen advocate for value pricing. And as things have moved on, of course, along come AI. He's well worth listening to and watching. And then another concept on the why now: diversify your offerings and focus on becoming brilliant, trusted advisors. And if your business model is high volume, low margin, and focuses on simple tax returns, it will not be viable in 3 to 5 years. These were comments made by Chris Jordan, former tax commissioner and also a former partner of KPMG at Xerocom 2022. Note the date. In 2022, in August, I believe, he made these comments: in 3 to 5 years. The future is already knocking. It's on our doorstep already. So let's have a look at the financial forecasting package that we have developed at ESS BIZTOOLS, primarily based on my experience as an accountant, business advisor, company director, company secretary in a listed public company, and as senior partner of an accountancy firm with 3 partners and around 50 staff. And my exposure to the Financial Management Research Centre, which was formed in Armidale at the University of New England nearly 40 years ago, with a brief from the Institute of Chartered Accountants and the Australian Society of Accountants, now known as the CPAs, to encourage accountants to deliver business enhancing services to SME clients, in addition to taxation return work. That was 40 years ago. In fact, probably a little bit longer. And some of you will have heard me talk about, and hopefully have heard me interview and conduct podcasts with Andrew Geddes. He was one of the joint founders of the FMRC at the University of New England. He had red hair in those days, not the white hair he has these days. And Andrew went on to become an outstanding ambassador for the accounting industry as a consultant to many firms, keynote speaker at many conferences. And he also became the chair of a company that grew from a one surgery veterinary practice in Townsville to an Australian and New Zealand-wide organisation, the largest veterinary surgery business in Australia, known as Green Cross. They also had an extensive network of pet food barns around Australia. And that company became a top 200 company on the ASX, and Geddes served as the chair for 10 years. So why I'm going through that is this is the background to where we are today. I just didn't decide to write all this a few weeks ago. It's risen from my exposure to all of those things, because I learned a lot in a public company environment. They basically run their system the way they think small businesses operate. But I'd seen both sides of the world, and I knew that SMEs were only basically receiving an annual set of accounts and an income tax return from the key professional advisors, our profession. Whereas in larger corporations, they analyse their results in every entity virtually weekly. The company I was with did it weekly. We were in the meat industry. The whole meat industry does it weekly. But so do major retailers like Coles, Woolworths, because I've observed and had discussions with some of their managers. And I did some consulting work for some of the IGA stores, and I know for sure they have the same system. 40, 50 departments in a store. They know the GP percentage, the average sale, the wages to turnover, and the bottom line result out of those 40 to 50 departments by about Tuesday lunchtime, with the week ending on a Sunday. Now, they're doing it right, most of them, because they joined a big organisation, which, whilst it's not a franchise, they try to operate akin to a franchise, in my opinion. This is the sort of service that we at ESS BizTools believe that we need to encourage our clients to go down that path and help them. So it's been developed by accountants at ESS BizTools, and it's built to help you offer virtual chief financial officer services to clients with turnovers up to $100 million. I don't know how many of you have got turnovers up to that figure, but some, if you've got clients that are running big hotels with gambling income coming in, you could well have over $100 million turnover companies. Includes resources to assist the development in your team. This is very important. The young graduates we got working for us in professional firms today have come out of university. They've gone through the CPA or the equivalent postgraduate training and exams. But they're basically involved in the tax return process. They need a variety of work. Every time I talk to an accountancy principal around Australia, I hear, do you know where I can get some staff, Pete? I'm looking for an accountant. If I send the specifications to you, will you be able to see if you can find me one? And I say, well, that's not the business we're in. There are people that do that. But what are you going to get them to do? And if it's the same old of just tax, I don't think you're going to encourage them to join you. I ran a very interesting podcast with Andrew Geddes 18 months ago where he really went through this and said the reason as a profession we're having trouble attracting and keeping staff is that this generation of younger people are looking for variety, more interesting work to do. And you're competing with the federal government, state governments, and major industries who are continually hiring graduates. So you need the resources to help your firm. We supply the training material for you to acclimatize your team to think like they are the internal accountant for your clients, not just doing the once-a-year tax return. Basically being in communication with them, and it might just be by a Zoom call every week. And this will help you to develop product champions. Within ESS BizTools, we've got over 50 separate packages. I'm not saying you need 50 champions, but you probably really need 20 to 25 if you're going to deliver the full suite of products. Now, some people will do 3 or 4 champion roles, but it's a good idea to rotate them as well, to give them exposure to a whole range of activities. And our training will help you to do that. So the first thing that needs to be done, in my opinion, is to analyze your client's business from a risk prevention point of view, from an internal control process, to understand clearly what happens, who opens the gates, who shuts the gates, right through everything else, who places the orders, on what authority, how do they decide whether to accept a particular price or is it got to go to the CEO for approval? What happens in your client's business? Because having worked in both a listed public company and in accountancy firms servicing the SME market, I know that I knew a lot more about what was happening in a listed public company that had operations in 3 states than what I really knew about my SME clients, other than 5 or 6 of them. 5 or 6 of them, we were involved in capital raising processes, research and development, and I was very closely involved in understanding exactly how they operated. But most of us don't really know what goes on in our client's business. So the first thing is to undertake a business analysis so that we understand the client 1 inch wide but a mile deep. not a mile wide and an inch deep. We really need to understand and identify the key risk areas and then make sure that they're fixed. It's very important that every client has a business plan. It's the same as a map for tourists. You've got to know where you're going. You've got to have a document so that the leadership team can sit down and think about it and analyze it and say, gee, we didn't know that was likely to occur. And I think there's very good reasons to have an annual strategic review. The business plan has probably been prepared for 3 years, but every year there should be around this time a strategic review to analyse what is going to happen in the new financial year that's less than 3 months away. Is there a requirement for some fine-tuning in the business plan strategies? Get the team together. You can facilitate that. So you fine-tune the planning. And predictive accounting reports are vital. This is obviously the financial interpretation of the business plan. But I've consulted to firms, gone in to have a look at what they've already got and find that someone's prepared the budgets and cash flow forecasts with no consideration whatsoever to the business plan. And I say to myself, well, what's the basis? The business plan should be prepared first, and then the budgets and cash flow forecasts, which are part of the predictive accounting reports. So this package allows you to provide deep financial insights. You've got to be the encyclopedia on what is happening in this business, because one of your real roles, if we're going to adopt the virtual CFO type presentation, is to be the key advisor to the CEO, the owner, the manager, whatever title you want to give, the final decision maker in the organisation. Or indeed, it might be a group leadership team. In my role in a public company as the chief financial officer and company secretary, I spent hours every day, some days all day, basically answering questions, primarily from the CEO, but other times from other members of the leadership team. I was a member of the leadership team, but I seemed to get a lot of questions. When they couldn't find anyone else to ask, I think they asked me to find out. So some of them were legal, some were marketing type areas. I would then go out and find someone who could give me those answers if I couldn't get the answers. Who do your clients go to with those sort of questions? Who do your clients contact? Now, I had a CEO that wasn't afraid to ring me at 3 a.m., but I don't think I'd encourage too many of your clients to do that. But who do they go to? I think you should be saying to your clients that they wake up at 3 a.m. and they've got queries, have a notepad alongside where they're sleeping and they write them down, and then they can ring you at 8 a.m. and ask you those questions because they need input. If CEOs of listed public companies need input for hours every day, because it wasn't only me and the leadership team, there were others. There was sales, there was marketing, there was production. So we need to understand what is happening, and your clients need insights. We'll help them predict and manage the cash flow so that any variation is immediately obvious. There's nearly neon lights going off that this is not where we thought we would be. So there can be an investigation to see what's wrong. Capital raising or grants or mergers and acquisitions are all important activities that you could be advising your clients on. These days, there's a lot more opportunity to raise capital than what there used to be. At one stage, from 2001 to 2012, my consultancy business had a contract with Oz Industries from the Australian government to be involved in the delivery of the COMET program, Commercialising Emerging Technology. Very interesting program. That was developed when John Howard was the Prime Minister, and Mr. Howard wanted to have a package put together, a service put together to help young, innovative companies to be able to get themselves organised and prepared so that they could try to raise capital from the market. And we did this. We had 12 of these positions around Australia, and we looked after specific areas and tried to help people, help them with everything, and ultimately trained them how to make presentations. And all we were using there to raise capital was Section 708 of the Corporations Act. It's a bit easier now because we now have crowdsourced funding equity raising, applies to companies with turnovers up to $25 million. And we have early stage innovation company, which is a capital raising process whereby the federal government pays an incentive to the investors to invest in a specific company that meets the guidelines and achieves the status of being declared an early stage innovation company. Are you familiar with all this? Because I find when I run presentations on these individual concepts, crowdsourced funding, equity raising, early stage innovation company, even Section 708 of the Corporations Act, I get feedback which tells me we don't know much about this. We've got full material we've written on step by step by step, PowerPoint slides, videos, articles that you can send to your client, a complete briefing session to make sure your clients understand the processes. And mergers and acquisitions, of course, there's going to be more of that. There's still businesses being bought and sold, and there's still people starting businesses. Some days I'm amazed, but they are. But one of the big variances that I've noticed between what happens in public companies and what happens in SMEs is the public companies are paranoid on their key performance indicators and business metrics. Gross profit percentages, yields out of boning rooms or anyone doing processing, producing food. There's all sorts of internal data that they need. They need it recorded, they need it analysed, and they need so that if there's a variation, it's very obvious. It's glaring out at you. What do your clients do? Your clients doing all sorts of things. Are you able to tell your tradie client that may have come to you to have a projection of where they're going to go and they've done their calculations that their productivity of a certain key group of employees will be, say, 90%? Are you able to give them feedback at the end of a month that something went wrong last month and they only achieved 71%? Because that means their charge-out rates are wrong if that's going to continue. And if it did drop from 90 to 71%, what caused it? Have they fixed that? Or if it was time that had to be taken off for training or professional development, that should have been factored into the calculation in the first place, was it? So this is the key information that your clients are looking for so that they know that their charge-out rates have been adjusted. Now, the 52-week business enhancement system is what big businesses utilise. I think we need it in SMEs. And with today's technology and communications, it's a no-brainer. It can be implemented quite easily. And the first part is daily. Yes, a brief daily report, a one-page that might talk about, it's going to the leadership team, incidentally, and it might talk about the bank balance, the debtors balance, the key payments to be made this week. So that might be the wake-up call to other members of the leadership team who would receive this report that, gee, I was supposed to go and see a couple of our debtors who haven't paid. Looks like we're going to need that money because on Friday we've got to pay bills that add up to more than what the current bank balance is. Or it might be yesterday's sales, yesterday's average sale, yesterday's gross profit percentages, things that leadership team people will look at, and if there's a problem, an abnormal result, they react very quickly. but they need to get that information. The system needs to produce it. I don't see that you as an accounting firm are going to be going out and doing that every day, but you need to set up the system, make sure someone in the client's firm has been trained how to do it, but make sure you're on the distribution list, that you get the report. Someone in your organisation looks at it and there's a reaction. Gee, the gross profit percentage today is only 21%. It's been averaging 36%. Is that a problem? And then follow up and find out, because that's the whole idea, to get a reaction. I don't see that in most SMEs. And why? Because the SMEs haven't got a full-time accountant working for them. Because in the bigger corporation, this is the accounting area's domain, to monitor these things and then bring them to management's attention. I think the rhythm of meetings is a great concept. Making sure your clients are meeting every day, brief, 5 minutes, make sure everyone's there, but very quickly, were there problems yesterday that maybe haven't been filtered through to everyone or to the senior management so that they're aware of them? They can look at it. We got to go out and fix that. Then a weekly meeting. A weekly meeting should be looking at one of the key things out of the 52-week business system, and that is the weekly profitability and performance report, which analyses each operation within the business. This is the one big difference between what a lot of big companies do and I think the majority of SMEs don't do, and that is get a weekly performance and profitability report. Now, it's based on some estimated figures and figures out of the budget, but it should be able to give your clients a great guide as to how they're going. Now, we've had that template in our system for 25 years because I saw how that worked in a big company. We had hundreds of activities, but every one of them had a performance and profitability report prepared each week. Had to be finished by Tuesday. Week was ending on a Saturday. By Tuesday, all the results come through to head office. My team analysed them on a Wednesday morning, and I sat down and had a sandwich with the CEO at lunchtime on a Wednesday. And the first thing he said is, where are the ones that don't meet our targets? What was the plan? What should they have achieved? So I'd put there was always, unfortunately, half a dozen to a 10 that varied, and he would be straight onto the phone to the area managers and really wanting to know that they had a review and found out what went wrong and fixed it. That was the important thing, fixed it. Think about how your SME operates. Do they get a weekly performance and profitability report? Most of them don't. So if there was a problem, if the gross profit, instead of being 38%, or we expected it up around 38%, only come in at 22%, what would your SME client do about it? Do they even know that their overall gross profit dropped for the week? Sure, they know their turnover figure, and they may have whinged a bit about it being a bit low. But do they do anything? Or are they too busy worrying about tomorrow and getting on with trying to do something else? Now, what happens if that was a major issue that then continues week after week after week after week? Because no one is there highlighting it and saying to the leadership team, we've got a problem, we've got to get to the bottom of this and fix it. That's what happens in SMEs. It just continues on. So the rhythm of meetings is very important. And then in this whole concept, you've then got the monthly meeting. And at the monthly meeting, there should be a monthly set of financial accounts, which have got a whole range of KPIs attached to them, of course, and balance sheet analysis. What it takes to deliver virtual CFO services. We don't just give you the templates and forms. We help you build the advisory mindset, because we run seminars along the lines that we're doing here throughout the year. So you're going to train and upskill your team. You're going to nominate product champions. What are some of the product champions? Debtors. The weekly performance reports. Research and development introduction. Research and development, full on. Someone's going to go do the whole process. Whole range of activities. Charge out rate determination for a tradie business. Charge out rate determination for a professional firm business. Retail or wholesale businesses setting the mix of products and the markups, overhead expenses, trying to ensure that they can achieve a profit target. They're all areas that you could have champions within your firm doing this work. And the deep dive business analysis, I talked about that. That is very important because that will give you knowledge, but that should then be documented in your files so that new team members joining you or people transferred within the firm to come to your team should have a briefing document. This is how this firm that we're about to start working on operates. This is our analysis. These are the areas that we might have a bit of concern about day-to-day business activities. And the 3-year business planning process is very important. It allows you to be the storyteller. I think there's nothing better than finishing a business plan and then preparing the predictive accounting reports that go with it, and then being able to sit down and guide your clients and their leadership team through the process so that they can see that if they open these businesses, they achieve certain profitability or, first of all, revenue targets, gross profit targets. These are the expenses, the labour to turnover figures, so they can see all that. There's the bottom line. But we're going to be borrowing money, or we've raised additional capital, or we're undertaking a major research and development project. There'll be other things that are happening. Or the company wants to declare a 10% of profit dividend each year. What's the position going to look like in 2 years, 3 years' time? This is not being the historian. This is being the storyteller. This is helping your clients understand the future. And this is what big businesses do far better than most SMEs. They're planning the future. They're even planning what the valuation might be of their companies in the future because of decisions they're making. That's the role you can play. So to deliver all this, you need to have the predictive accounting report. I've referred to a couple of those items already, the budgets, but the key drivers are very important. I don't think people give enough awareness of key drivers. Key drivers are the inventory for raw materials, if your client's importing raw materials, your inventory of completed stock, if they're producing things, the debtor's position, and in each of these, the key and KPIs that go with them, or business metrics. What's the debtors days outstanding forecast to be? I've seen budgets get prepared in this way and looked at it and done the calculation because no one had written the figure there and calculated, geez, okay, they're assuming they're going to get their debtors days outstanding at 30 days. Now that's interesting. Australia's got a national average of in excess of 58 days. We received a very dubious award, dubious in my opinion, about 4 years ago, that Australia had the longest debtors days outstanding in the world. So anyone that tells me that they're going to collect their debtors in 30 days overall, I suggest we sit down and do it again because it doesn't work. And that was one of the real issues that Mr. Robson from MYOB wrote about in the article I referred to earlier, that people were starting up businesses expecting that every credit customer they had would pay them on a 30-day basis. At the time, I wrote an article and said, I hope those people never got advice from accountants. They should have got advice from accountants. But I hope if they'd seen an accountant, the accountant would have stressed to them there was no way in the world they were going to get paid on an average of 30 days, unless their terms of trade were 7 days. And that applied in the meat industry or parts of the meat industry at times. The cash flow forecast, what's it show? What's its variances? And what's the projection down? Let's look 7 or 8 months ahead. Is there going to be some problems? Does that mean that there may need to be an injection of new money? Where's that going to come from? Should there be some thinking given to trying to raise some additional funds, capital? How's your client think about that? The projected balance sheets tell all sorts of stories when you're really working in the future. This is what this is going to look like. So what's it take? I can visualize you sitting back and saying, well, that's all right for Towers to sit there and talk about this. He's done this, and I have. So let's go through it. First of all, I think you need to embrace the concept of the 52-week business enhancement system. Daily, weekly, monthly, daily, weekly, monthly in the following month, and so on. 12 times per annum that model operates. Or if some of you want to operate in 13 4-week periods, which a lot of the big end of town do, you would do it 13 times in the year. What that means is your client's getting input. You would submit a report, preferably at the end of every month. That's part of this service. Now, some people say to me, oh, clients won't pay this sort of money. We've got subscribers that are being paid $25,000, $40,000, $60,000. And I've got one gentleman that tells me he's getting paid $125,000 to deliver these CFO services to clients. Just look at what it would cost the client to have a full-time CFO working for them. And in most of the SMEs, that full-time CFO would be a bit bored, I think. So there is a wide gap there. Obviously, your clients have got to be running successful businesses. Hopefully, your involvement is obviously going to help them make more money, run a better business. Implement the daily, weekly, monthly rhythm of meetings. Keeps people informed. Everyone knows what's going on. And those meetings are not just for the leadership team. I didn't actually comment on that before. It can be within departments that there's regular meetings being held. Deliver the KPI reports and strategic reviews. This is important because I found when I was in the public company environment that the managers of meatworks, the retail butchers, shop managers, the foremen in meatworks all related a lot better to KPI type reports. You gave them a profit and loss account to the meatworks manager. They didn't really absorb it. They looked at the bottom line, that was it. Whereas if they receive a summary that's built around their key performance indicators and business metrics, they understand those figures. They know what they should be. So they react a lot quicker. Try it out with one of your clients. Give him a sheet of paper with some results and deliberately change one. Make out you made a mistake. And I think you'll find your client will react. But you better not leave them to sleep on it overnight, because I know someone that did that and the client rang them at 2 a.m. or something because he couldn't get to sleep. He was worrying about this figure, which was not the right figure. It had been done there deliberately to try to find out if there was a reaction. There was. Provide capital raising, advisory and funding solutions. We've talked about some of these. Section 708 of the Corporations Act. Your client can raise up to $2 million in 12 months. There are restrictions. Well, we're talking to your clients about it. Early stage innovation company, primarily targeted at a company that's under 3 years of age. There are some requirements that a company up to 6 years of age can be admitted. Their turnover has to be under $200,000 in the previous 12 months, and their expenditure has to be under $1 million. So they're new, young companies that have developed some new concepts. They're innovative. Worth looking at. Crowdsource funding, equity raising, any type of business, anything. Turnover under $25 million, gross value of assets under $25 million, not listed on a stock exchange. That's basically the restrictions. And there's a lot of work that you can do because these companies all need business plans, the predictive accounting reports, valuations, mentoring on what this concept means. And dealing with, in the crowdsource funding area, with another group of advisors called the crowdsource funding intermediaries. But it's worth you being very familiar with it. And then we got venture capitalists. You also need all of what I referred to earlier. And make sure your client is geared up. They also need to understand corporate governance, which we have within ESS BIZTOOLS. Real tools that will create real value. The charge out calculators for trades and professionals. I briefly mentioned them before. Very important. I have one subscriber that's started with about 4 or 5 tradies and now got 120 because he's got the charge out rate calculator. And he offers monthly or 3 monthly service. If they won't get their figures updated by at least 3 months a year, he doesn't act for them. The stock analysis strategy for retail and wholesale businesses. Have you ever sat down with a client running a retail business and tried to work out how they're going to achieve whatever their profit target might be? It's not a task for the faint-hearted, but we have a system to help you do that. Management accounting tools to explain performance to your clients. This is the business metrics and KPIs, the break-evens, the what-if type calculations. Lean management advisory tools, waste that's going on. The Japanese pioneered this, but it's systems that should be implemented by businesses everywhere. We've got some very interesting material on it. The business health check, which gives you a summary sheet so you can very quickly identify variations, whether it's gross profit percentage, average sales, so that you can instigate the discussions with your client, make sure they understand what this means. Succession planning, very important for all types of businesses. Debtors management, I briefly mentioned the MYOB survey. A lot of the new people going into business really had no idea of a debtor system. You can implement that straight away. We've got a complete system in place. There it is there. The debtors management system manual. You just personalize it with the name of the client. Perhaps they've got some variations. They don't call things the cash sales book. They might call it the green book. You just go through and edit it that way. So they got their manual and you can then charge your clients. The personal property securities register. I hated that legislation when it first came out. Thank goodness an inquiry was run and 380 recommendations were made. I understand they've all been changed, rectified, but still all your client needs to understand it. Corporate governance and directors. This is all the material that you've got at your fingertips to be able to utilize with your clients. Board of advice package. How many of your clients are using board of advice? So becoming a more popular way. Mergers and acquisitions, I talked about before. That's perhaps involving business angels and other type investors, but they're there. The business valuation, the processes for valuing businesses. Research and development, a huge area that I'm afraid a lot of accountants don't seem to take seriously. I don't know why. I've had accountants say to me, oh, we can't give research and development advice. We only give advice on things on the Tax Act. I said, well, I've got bad news for you. Research and development is embedded within the Tax Act. Is the response I get. Another common comment's been, oh, I'm not a scientist or an engineer. I said, what's that got to do with it? Oh, well, we're going to need those sort of skills to be showing clients how they've got to do it. That's not the right answer. I think the appropriate comparison, if you want to do that, is you're the internal auditor. We have got all the forms, the templates are all in the system. There's 46 separate forms for research and development. Now, I don't expect any one client to use 46 forms. But if you had 10 to 20 research and development clients over a year, you may use all those forms, depending on the variations. But your role is to make sure the client understands. We've got a full system, which will take you from the initial, I've got an idea, and the client rings you and says, someone's just coming to me with a great idea, and I've heard about research and development. What do I do? Our system spells it all out for you, and it takes you right through what's got to be done each month, the information that's got to be collated at the end of the financial year, what's got to be lodged with Oz Industry, and then finally the tax office, where you're claiming the benefit for the benefit of your client. We've got the whole system. But you're the internal auditor. You're not doing the research and development activities. The client has to organise that. Buying a business. That's still going on. People are buying a business. People are selling businesses. We've got full notes on systems to help your clients. The Export Market Development Grant. I still find people are unaware of that. It applies to any type of business, not only a company, any type of business with an Australian turnover of less than $20 million who are exporting or proposing to export to countries other than New Zealand. Sorry, New Zealand, you're treated as the cousin, and we don't include you. And countries like Russia and Iran and a few of those others that Australia is not approving of what they're up to in the world. But the rest of the world, you could receive for your client could receive $770,000 over an 8-year period from research and development. It's all on a 50-50 basis, and it's applied for in advance. There's hundreds of government grants. We have details of these in our system. The weekly performance reports I've mentioned. So are you ready to diversify? This is a key question. You have 3 options, as I see it. You could spend hundreds of hours creating your own tools and resources from scratch. I can assure you it will take you hundreds of hours to put together everything that I've briefly summarised here today. You could leverage the ready-to-go advisory product packages developed by ESS BIZTOOLS, which includes everything that we have, because we have 3 earlier packages. Advisory intro, which is the very bottom, then we go up a step to the starter package, then we go to the advanced package. And each time you move up, you bring up the previous material, and it's got more added to it. And that's where we end up then with the financial package. So you could use our package, or you can ignore all of this and hope for the best. And if that's your decision, you're probably not interested in watching this video any longer. You probably haven't made it to this stage, because I think that is a wrong decision. I think firms need to resolve one, or option number 1 or option number 2. And there are other people who are supplying some services. We don't think they've got as extensive a range as what we have got, but there are other people. You can find out more by going to our website, www.essbiztools.com.au. And you can start earning fees on some of these projects. We think about 80% of our material that someone with an accountancy qualification has done the PY and all that. 1 to 2 weeks after you've subscribed, you could be going out, talking to your clients, and hopefully getting them to sign up for fee-producing exercises. Now, there's promotional material that you have to implement, and we've got that in the system. So you're not going to have to sit around for months or a year before you can start earning money. You can do it straight away. I think this is the year that you really need to future-proof your firm. Go back to what I was talking about at the beginning, what Mark Withersham had to say and what the former tax commissioner had to say. Think about those things. Think about the turbulence that's going to be created in our profession as firms start really feeling this change. Attract and retain top talent. I think this will help you do that, because you are definitely getting a variation of work. And you will definitely create a lasting impression as a brilliant, trusted advisor, because you will be working with your clients in planning the future, not being the historian of past events. Someone does that, of course, but the exciting thing, the helpful thing, which will help your clients run better businesses, the thing that the market needs because of the failure rate and problems. And just to look at people who recently went into business, read the report in the Financial Review in February 2023 that Mr. Robson from MYOB wrote. Assist your clients to survive and scale up in the difficult operating environment. So if you're ready to diversify, set your firm on a path of significant diversification, to overcome the emerging challenges just around the corner, you can go to our website, www.essbiztools.com.au. Pardon me. Click on packages and pricing, and then you can start going through it. And that's a display on the screen as to what you've got to do. And we're quite happy for you to have a complimentary Zoom meeting with me, where we will go through the process, look at what's involved with your firm. So send me an email, please, peter@essbiztools.com.au, or telephone me 0418 190 181. Thank you for being with us. I just checked chat. There's no questions. If you do have a question, can you please send them through to me? But if you'd like to talk to me off air, please give me a ring, 0418 190 181. Or send me an email, peter@essbiztools.com.au. And I look forward to hearing from you. Have a great day. Goodbye.